So welcome class. This is yet another question from the anonymous university paper, and you can see it's question 4 with 25 marks. It's a question on sole proprietorship. This young man here, very good in it. So work with him.
Okay, welcome. Let's tackle question 4. The following is a trial balance from the books of Mr. Axim, sole proprietor, as on 31st December 2021. There's the information, then additional information. Provide for depreciation on plant and machinery at 10% per annum. On fixtures and fittings at 15% per annum. Then provide for bad debts at 4% on debtors. Then prepaid insurance amounts to 500 shillings. Then rates accrued amounts to 400 shillings. Closing stock was valued at 60,000 shillings. During the year, Mr. Axim took goods worth 2,000 shillings for his personal use. Required statement of comprehensive income for the year ended 31st December 2021. Then statement of financial position as at that date. So we begin with the statement of comprehensive income. Say Mr. Axim statement of comprehensive income. For the period ended 31st December 2021. We begin with sales. We've been given stock as at 1st January 50,000, free all premises, bill received, salaries. Sales is 520,000 shillings. So sales is 520. Then cost of sales. Cost of sales, we take the opening stock, we add purchases, then we less the closing stock. So opening stock as at 1st January 2021 is 50,000. That's the opening stock. It's 50,000. Then purchases is here, 280,000 shillings. Then we less closing stock. Look at additional information. Roman what? 1, 2, 3, 4. Roman 6. We've said Roman 5. Sorry. Closing stock was valued at 60,000. So we less 60,000. 50,000 plus 28 is 78. 78 minus 60. No, it's 50,000 plus purchases is 280,000, not 28,000. 50 plus 280 is 300 and what? 313 minus 60 will get 270,000. So the cost of sale is 270,000. We less it from the sales so that we can get the gross profit. Gross profit 520 minus 170 will give us 250,000. So we look at the information and so that we can see if we have other incomes and gains. You can see that we have discount received. So we had discount received. Add other incomes and gains. That is discount received is here 4,500 shillings. Then we come to imesonga. Mbona namba zinasonga? Songi. So okay, let's continue. It seems discount received is the only other incomes and gains, so we go to expenses. Expenses we have discount allowed. Discount allowed is an expense. Discount allowed. We have salaries, advertising, we have insurance, we have general expenses, bad debt, we have rates, we have depreciation. Depreciation of plant and machinery, and fixtures and fittings. Then we also have provision for bad debts. So discount allowed, we have 1,000. Salaries 35,000. Advertisement is 10,400. Insurance, we have 3,800. We less the prepaid insurance, which is 500, so we remain with 3,300. General expenses 7,200. Bad debt 1,000. Rates, we have 5,600 plus accrued, which is 400. So we'll have 6,000. Depreciation for plant and machinery. We have been told that provide for depreciation on plant and machinery at 10% and fixtures at 15% per annum. The value of plant and machinery is 140,000. So we take 10% of 140,000, which is 14,000. 14,000. Then 15% of fixtures and fittings. Fixtures and fittings is 25,000. 15% of that is 3,750. 3,750. Then provision for bad debt. Provision for bad debt is 1,800, but we've been told provide for bad debt at 4% on debtors. The value for debtors is 59,000. So 4% of 59,000. 4% of 59,000 is 2,260. So this means that the provision has increased because the last one is 1,800. So we take 2,360 less 1,800. It will give us 560. So it's an increase in provision for bad debt. So we had zime overlap. Bado.
Inatekana kwa producer pia inatekana kwa.
Hizi zinabaki hapa.
Inatekana kubaki hapa. Click enter. Songa sasa. Delete. Click up.
Hey.
Delete hizo. Delete. Don't process what and the vocal and the cases and so.
So increase in provision for bad debts is 560. 560. So we get the total for the expenses: 1,000 plus 35 plus 10,400 plus 3,300 plus 1,000 plus 14 plus 3,750 plus 60 plus 560. We'll get 88,710. So come back here, 250 plus 4,000 plus 4,500. This should be 4,500. We'll get 254,500. 254,500 less the value of the total of expenses, which is 88,710. Will arrive at 165,710. 790. This is the net profit for the year. We proceed to question 4B. It requires us to prepare a statement of financial position for Mr. Axim. So, say Mr. Axim statement of financial position. As at 31st December 2021. Non-current assets. Non-current non-current assets, we have freehold premises valued at 240,000. Then we have fixtures and fittings 25,000 and plant and machinery at 140. Freehold premises, depreciation net book value, it's 240. Plant and machinery, cost is 140,000. Depreciation is 14,000. Net book value will be 140 minus 14,000. We'll get 126,000. Then fixtures and fittings at cost is 25,000. Depreciation is 3750. The net book value will be 21,250. The total for non-current assets will be 387,250,000. Then current assets. Current assets, we have bills receivable, which is 30,000. We have debtors and closing stock. Closing stock is 60,000. So we have bills receivables, bills receivable is 30,000. Debtors The value for debtors is 59,000. We less provision for bad debt, which is 2,360. We'll arrive at 56,640. We also have closing stock, which is 60,000. And we were told that prepaid insurance amounts to 500 shillings. Prepayments are treated as current assets, so we add here insurance, prepaid insurance. Prepaid insurance, which is 500. We get the total 30 plus 56,640 plus 60,000 plus 500 will arrive at 147,140. This 147 plus 387 to 50, that is non-current asset plus current asset. It will give us 534,390 shillings. We go to current liabilities. Current liabilities, we have bills payable 15,000, creditors 43,000, bank overdraft. Bills payable 15,000, bank overdraft is 18,600. Bank overdraft is 18,600. Then creditors 43,000. Get the total 15 plus 18,600 plus 43. It will give us 76,600. So we take this the total of total assets minus current liabilities to get the net capital employed. Net capital employed is total assets minus current liabilities, 534,390 minus 76,600. It will give us 457,390. Go to financed by. Yeah, we take if you have any long-term liability, but in this case we don't have, so we go straight to the capital. Capital is 360,000. 300,000. Sorry, it's 300,000. Capital is 300,000. Add the net profit. Net profit was 165,790. less drawings. Drawings, you are given at the trial balance drawings value of 6,000, but additional information number 6, during the year Mr. Axim took goods worth 2,000 for his personal use. So drawings is 6,000 plus 2,000, which gives us 8,000. So we less 8,000. 300 plus 165 minus 8,000 right. 300 plus 165, 790 minus 8,000. It will give us 457,790 shillings. And as you can see, it has balanced. So we are good to go. That is net capital employed. $460,000. That's all. Thank you.